Okay, good morning. Um, Sorry for the technical difficulties we were having with the Zoom this morning, but thank you, Joe. And we're going to get into this PPP relief programs. I'm going to first do a little introduction and recap from where we were before back in June. So without further ado, this is going to be our agenda and let you know who I am. I run a nationwide practice with locations in Atlanta and New York. We do audits, remote bookkeeping for parishes around the country, consulting around fraud prevention, process design, et cetera, and all sorts of tax matters. So that's who we are. I am the author of Financial Management for Episcopal Parishes, published by Church Publishing, part of the CPG group. I am an Episcopalian, and here is my email, office, and cell phone number. So we'll get to that at the end. But let me put out a disclaimer. Anything I say today is generic in nature and cannot be applied to your specific situation. You need to consult with your own advisor and your own financial institution regarding anything specific to your particular situation. So quick review, what is the Paycheck Protection Program, PPP? It's a loan given by the Treasury, applied through your bank. Applications should have been already submitted, and we're going to talk about loan forgiveness. Basically, this part of the loan was for 8 weeks, something that is very critical. Housing allowance for clergy counts as payroll cost. However, if that housing allowance causes your clergy compensation to exceed $100,000, then you are limited to the $100,000 that can be reimbursed or considered as part of their reimbursement calculation. Okay. Get through that. We have a new Flexibility Act. As a review, again, this expanded from 8 weeks to 24 weeks of the period that you could consider to receive the use for documentation to receive the refunds. It starts as of the moment the funds are deposited in your bank, and it changed the ratio from 75% down to at least 60% for salaries, leaving no more than 40% for eligible expenses. So at least 60% must be spent on salaries. And again, housing allowance does count towards clergy's salary. You can use that. You're extended to 24 weeks or at least by December 31, 2020. So where are we today? People ask a lot of times more, what's excluded from payroll cost? I can get that salary and wages and all that, but what is not included in payroll cost? So anytime you have annualized salaries greater than $100,000, that's where it stops. You could have a $110,000 compensation, but only $100,000 is going to be considered for any part of the forgiveness calculation. If you were using an 8-week covered period, in other words, from the point in time you received your loan, that's the date of deposit of your loan into your bank account, plus 8 weeks, that was considered under the PPP, the first 8-week covered period or the 8-week covered period. If you have met all the conditions for forgiveness at the end of this 8-week covered period, then you can apply for forgiveness based on just that 8 weeks. But understand that $15,385 is the maximum per employee that you can ask for forgiveness. If you are under the 24-week covered period, and that is from the date you receive your loan deposit into your bank account plus 24 weeks. The Extension Act gave you up to 24 weeks to be able to meet those payroll costs and bring those employees back online. And that now has a maximum of $46,154 for that 24-week covered period. Basically, taxes imposed on you as the employer are not recoverable. Yes, the taxes that you paid for the employee that the employee had deducted from their salary, that is recoverable. Your portion of the employer taxes are not recoverable. If you have a missionary residing outside the United States, anyone who resides outside the United States cannot be included in the calculation. If you used any sick or family leave during this time period to pay for employees who might either have COVID themselves or be caring for someone who did and needed assistance, if you use Section 702 or 704, that cannot be included in the payroll cost. And anything that you might pay to independent contractors, they're not employees, and those are not included. What they have done is they have put out forms, retracted the forms, put out more forms, retracted those forms, put out an additional form, and said, hold on till you use that. So this thing has gotten really confusing on what forms to use. If you received a loan of $50,000 or less, you can use the streamlined SBA form 3508S for loan forgiveness. If the following conditions apply, you can use the EZ 3508 loan forgiveness. All borrowers that are self-employed and have no employees, that's not us, did not reduce salaries or wages by more than 25% and did not reduce the number of hours of their employees. That may apply to you. Or experienced reductions in business activity as a result of health directives related to COVID-19 and did not reduce the salaries or wages by more than 25%. Or in other words, if you went to online services and it caused a reduction in activity as well as donations, but you did not reduce the salaries or wages of your employees by more than 25%, you can use Form EZ. So, but I'll always point you to your financial institution's instructions on these forms. If you've already submitted 3508S and want to change to Form 35EZ, contact your lending institution and they will let you know what to do about that. However, if you've already submitted 3508S and don't want to change to the EZ, then again, go back to them, but they will likely let you continue under that. There is a new one that is not even yet published for viewing, and it's called a 3510, and it's for those nonprofits who receive more than $2 million in PPP loans. And frankly, the jury is out on that when they look at dioceses, because the language in this talks about and all subsidiaries. So the opinion of the AICPA and those that I talk to is they're not going to ask dioceses to submit this form if all of their churches add up to more than $2 million in loans. But if any single institution got more than 2 million, they're going to need to file a 3510. This 3510 is particularly onerous because it has an extensive level of additional documentation justifying why you needed the loan in the first place. If anybody is in this situation, absolutely contact professionals on this one to get some help. So how do we calculate the forgiveness? You need to keep very good payroll records, and hopefully you're using a payroll provider that is keeping these records for you. Many of them, such as Paychecks, do an excellent job of calculating this kind of thing for you, or ADT or several others. So first thing you need to do is make sure you have the payroll records for whether you're using the 8-week or the 24-week period. And then calculate what are the allowable payroll costs: salaries, wages, commissions, or similar, housing allowance for clergy, if there are any cash tips, payment for leave, allowance for separation or dismissal, housing allowance or stipend. You know, what's not in here are things like car allowances, which frankly are no longer non-taxable anyway. They're now taxable as W-2 wages. So any retirement benefits that you might pay. So you need to first calculate what is payroll cost. Then you need to look at mortgage interest. Let me stop right here. This payroll cost needs to come up to at least 60% of the forgiveness that you're going to apply for. If it does not, you can apply for no forgiveness. There's not fractional forgiveness. You must have 60% of your forgiveness application be in this column called payroll cost. The other 40% we're going to talk about beginning with mortgage interest. The mortgage had to have been in effect prior to February 15 of 2020. If you have payments related to a related party, they're limited to the mortgage interest owed on the property during the covered period. So in other words, if you have a mortgage with your diocese, a diocesan loan, if you will, only that interest amount can be covered, not the principal amount in this case. If you are paying any rent or lease for real or personal property. So that means not just the building, but it also means other personal property. Copier lease, for example. The lease has to have been in effect prior to 2/15/2020. Payments to a related party are limited to the mortgage interest again, or any other interest-only payments for personal property. Utilities. They've gotten more specific on this because they were rather gray in this area. They're now talking about payment for such things as electricity, gas, water, transportation, which would be public transportation, telephone, or internet access. They have added internet access to this. Service must have been established prior to February 15. Step 2, calculate any reduction you had in payroll greater than 25%. For any employee that did not get during any single pay period in 2019, wages or salaries at an annualized rate of pay more than $100,000. You'll need to know that number. Did the average annual salary or hourly wage during the covered period decrease by 25% or more from January 1 to March 31? And then reduce your forgivable amount by the reduction that exceeds 25%. In other words, what they're looking for is they're looking for not paying for things that might have occurred that reduced your number of people or their hours prior to the enactment of the act. And the act was enacted on March 31. So any action that you took as an employer prior to April 1 doesn't count, other than to know that it was something prior and it doesn't carry into and impact your covered period. You should take into account only decreases in salaries or wages. That would not be true if you had a decrease in a reduction of hours. You would ignore that in step 2. Step 3 will pick up the reduction in hours for hourly folks. This is around salaries and wages. If your financial institution has a forgiveness calculator, use it. Talk with them. Get their help using it if you don't understand. They are there to help you, and each financial institution will have something slightly different. Step 3, and this is where it gets really interesting. They talk about something called full-time equivalents. So let's say that we have nursery workers, and we have a part-time sexton, and we have part-time office help, maybe even part-time clergy. But at the end of the day, they want this calculation to be done on a full individual, a full person, a full-time equivalent. So we're going to have to add up these different folks in order to get to a full-time equivalent. So at your election, they're going to look at the time period from January 1 through February 29, or from February 15 to June 30, in order to calculate your covered FTEs. I don't think we can consider a church to be a seasonal business, but they do have something around that. Now, there is something called a restore criteria that decreases loan forgiveness calculated in steps 3 and 4 and ignores it. So what in the world is that all about? This is what they talk about now in FTE reductions and safe harbors. In other words, they created a big spaghetti mess around this full-time equivalent thing. And that's how they used it to calculate and determine a reduction in hours for hourly folks. What did you do to reduce their hours, and what effect did it have, and how do we now make a whole FTE out of that? Now, luckily, there's going to be a simple way to do this. But if you document an inability to rehire individuals or restore hours, and you hire similarly qualified employees for unfilled positions on or before the end of the year, or return to the same level of activity as before February 15, these all count into the FTE reduction calculation. Now, there are 2 safe harbors. We're going to go through this painfully, and then we're going to I'm going to give you a very simple answer. Borrowers unable to operate at the same level between February 15 and the end of the covered period. That could be your 8-week period or your 24-week period, because of guidance issued by government agencies, such as a governor saying, we're going to shut down the churches, will not receive a reduction in forgiveness for a decrease in FTEs. In other words, you don't have to worry about calculating and getting a forgiveness for the decrease in FTEs if the government shuts you down during your covered period. That's safe harbor number one. Safe harbor number two, you will not have to reduce your forgiveness if they reduce their FTEs and you reduce your FTEs during the period February 15 and ending April 26, and you restored those FTEs no later than the earlier of your application date or the end of the year. So you have until the end of the year to bring your workforce back up to full strength at the same level of pay that was there on February 15. Now, let's talk about how we can simplify this FTE stuff. You don't go add 5 hours for nursery worker plus 20 hours for sexton plus. You don't do it that way. Their simplified method says if you have somebody on your payroll and they are part-time, they are considered a 50% FTE. So if I have 2 nursery workers working part-time, they add up to 1 full FTE. That's the simplified approach. Let me stop here and look at a couple of questions. Can you apply 100% of the loan towards salary? Absolutely. That's the easiest way. How are the state and local taxes assessed on the compensation of employees different than the state income taxes that would be includable in salaries? I'm not sure what state you're talking about, but I'm going to guess places like Ohio, New York, California, the amount that's deducted from the paycheck of the employee is includable. And then our 3 part-timers do not add up to 40 hours per week. We're going to use the 50% calculation. So if you've got 3, you basically have 1.5 FTEs. Okay. Seeing no further questions, we will move on. Step 5. Now you calculate your payroll costs for the forgiveness floor. In other words, what is the minimal amount that you have to have in order to get forgiveness? 60% of eligible costs are to be used for payroll. If it's less than 60%, forgiveness is reduced in most cases to 0. There are a couple of safe harbor conditions that we just went through that would not reduce it. So let me go back one more time. You've got 2 safe harbors that if you would otherwise not be eligible for forgiveness, meet these 2 safe harbors on your calculations for individuals, and you will be okay. If you were, another question. If you're using the 24-week period, do you need to wait until the end of the period to apply for forgiveness? The answer to that is no. If you meet all the conditions for forgiveness, the reinstatement of employees, the calculation of payroll greater than 60%, etc., you do not need to wait until the end. I'm going to preempt the next question, which is probably, well, what if I go all the way to the 24-week end period? How long do I have to apply for forgiveness? You do not have to apply for forgiveness during your 8 or 24-week period. You have 10 months after your 24-week period ends to actually make application and get the forgiveness. Your financial institution would be much happier with you, on the other hand, if you would promptly file that so that they could get it off their books. and get reimbursed by the government. But you don't have to wait until the 24-week period is up. Next part of that question, do you need to wait until the end of the next quarter for your Form 941s for payroll documentation? No, as long as you're using a third-party provider. If you're not using a third-party provider, then it's going to be more difficult to convince them with payroll coming out of your own calculations in your own system. But understand that nobody's coming after you to repay this loan now. So if it's better to wait until you file your 941, if you're doing the payroll yourself, then I think you should wait. But you'll have 10 months after your 24-week period runs to make that application, which will extend well into next year to make that application. Okay. Summary. It's time to gather your documentation and file for PPP loan forgiveness. The key message here is follow the instructions of your lender. All the lenders I know about, and I certainly don't know about the vast majority of them, but the ones in which I've come in contact, all have fairly detailed instructions and have a team of folks that are sitting there waiting to help you through that. Rely heavily on your lender for their assistance. They will tell you what documentation you need to submit based on the form that you are going to use. There is no way we could go through in this webinar all of the different combinations and permutations and forms, etc. I would lose most of you at that point in time. And the big thing is to make sure that you go back to your financial institution and follow their instructions. Another question. Do you have the 10 months to file for forgiveness if you use the 8-week period? Unclear. They have not made that determination. However, if you meet that within 8 weeks, choose the 24-week, you're fine. You will meet the conditions under the 24-week at the same as you would under your 8-week. So you can choose the 24-week and then you're fine. Go on and make the application. Other questions? If we pay our nursery workers 60% of minimum hours, how do we handle them? I'm not sure I understand that question exactly. Are you talking about minimum hours being 40 hours a week, 30 hours a week? So I would need to understand that a little bit better. $100,000 per employee, is that clergy salary and housing? Yes. Clergy salary and housing, because housing is considered income or salary and wages at this point. So, but that's your limitation. The combination of your clergy salary and the housing, the most that you'll be able to apply for is the 100,000. If it adds to 110, 115, that last 10 or 15, you will not be able to get any reimbursement for or even have it calculated in your calculations. Next question, can you use 100% of PPP funds on payroll? Yes. That's what they would love for you to do, and that's the simplest application and documentation that you can have. Because if you have to provide mortgage or utilities or some of these other things that you might use in that other 40%, you're going to need to provide proof of that and the documentation in the form of invoices and that sort of thing. So the level of documentation goes up significantly if you're using non-payroll expenses. How is loan forgiveness to be treated for accounting purposes as revenue? Good question, because in the last webinar, we covered how to account for it, and we also covered how to handle it when we get the forgiveness. So I'll answer it now, but I'll refer you back to the former webinar that we did on June 10, and I know Joe and Seep and have that cataloged, and you can go look at that. But the answer is, it is not income. You recorded PPP on your books as a loan. When you get the forgiveness, you're going to go back and take that loan off the books. So in doing that, you're going to debit the loan, and depending upon how you set up your books initially, whether it was with an 8,000 account or what have you, you're going to credit that net asset. So it's not a transaction that involves any income or expense. Now, your payroll expense, of course, is payroll expense. But we went through that in the other one. And Joe, if we need to, do another closeout webinar on how to close out your PPP in accounting, we can do that. But that is in the prior webinar. Let's see. Under clergy costs, can you include retirement costs? Yes. Can you exclude retirement to stay under the 100,000 cap? That depends on how much you want to apply for. But you need to look at the form and its calculations, and typically they're going to cap. So if you include it, it's going to throw you over. It's then going to stop you at the 100 limit. So you're going to get the 100 limit if you include it. If you exclude it and stay under it, you're going to miss out on what would have made up between not including it and including it. So that difference between 96,000 and 100,000, for example, you'll miss out on that 4,000. So generally you would want to include it and get all the way up to the 100,000 cap. Some institutions have told those organizations receiving $150,000 or less to hold off filing. In fact, will not let people file. Is there any expectation that Congress will follow through with the legislation to forgive loans below 150? Yes, they've already done that, and that's in the Form 3508S and the 3580EZ. So that is in place, and that's what we covered today. Different question. What is the latest from Congress granting automatic forgiveness on any loans less than 150,000? I would tell you that the rumors of that and anything else you might want to have a rumor about are abounding in Washington. Don't believe anything until you see it signed by the president into law. There are talks all over the place, but there's nothing concrete on that. If you're submitting utility expenses, are they expenses that were incurred during your 24-week period? Yes, but only to the extent of 40% of the reduction. Next question. Reduction in staff occurred after PPP funds were all used, 12 weeks versus 24 weeks. Can we use the FTE for the 12 weeks, or must we look at FTE at the end of the covered period? Well, it depends. It depends on whether you're going to use that entire length of time of 24 weeks. What you can't do is you can't say, well, okay, I'm going to use 12 weeks for utilities, and I'm going to use 24 weeks for rent, and I'm going to use 8 weeks for salary, and I'm going to use 16 weeks for FTEs. You really want to pick the day and all the documentation up to that day. Another question around nursery workers. We normally guarantee our nursery workers 3 hours per week. During the shutdown, we've been paying them 60% of their 3 hours pay. Sounds to me like you have not reduced their hours, but you have actually reduced their pay. And that's going to go back to our step 3 calculation. And while I'm at it, let me come back over to this. Here's what your 3508 EZ looks like. And you will notice that the payroll schedule is down here. And you've got an alternative payroll covered period, and you can choose those dates. So you don't have to go 24 weeks or 8 weeks. You can go something less than either one of those under the guidelines. But you're going to calculate your payroll costs, your mortgage interest, rent or lease, utilities, and then this is your total potential forgiveness minus your loan amount. You're going to have to determine if 60% of that is payroll and determine your forgiveness amount. That's kind of it, other than your documentation. But you're going to need to sign and certify the various and sundry terms and conditions that they have. Then they look very similar to what you had before when you made the application. But there's down here at the bottom, at least one of these two must be, could be both, but at least one. You were unable to operate between February 15 and the end of your covered period at the same level of activity as before 15, due to compliance with requirements established or issued between March 1 and December 31 by the Secretary of Health and Human Services, the Director of the CDC, or OSHA, related to the maintenance of standards of sanitation, social distancing, or any other work or customer safety requirements related to COVID. The first one says you did not reduce the number of employees or the average paid hours between January 1 and the end of the covered period. So you've got to certify one of these two, and it's going to be useful to get to know these forms and to talk to your financial institution about what they are expecting, and they will help you through answering those questions and filling out that form. Next question. State ordered shut down our nursery school for 14 weeks. We had to lay off full-time administrator, brought her back in September. Can we still use 24-week period without affecting forgiveness? Absolutely, you should use the 24-week period. ADP wants to greatly reduce our forgiveness because of the 14-week layoff. Is this a safe harbor adjustment? We're going to go, this is where you're going to need to go back and look at the safe harbor in detail, not the safe harbor that I've put on the screen. That's why I said in my disclaimer, you really got to get into the weeds on this. If that's something that I can help you with after the call, I'm more than happy to do that. But I'm going to need some more information. Are we penalized if an employee voluntarily quits during the covered period? No, that goes back to your safe harbor. What are the restrictions for using alternative payroll period? Not sure what you mean by alternative payroll period. Why don't I know this person who put out this question? Why don't you give me a call after this and we can talk through that so that I understand what you mean by alternative payroll period. I'm going to take a stab and a guess at it in terms of what you mean there, but your payroll period has to begin, your covered period has to begin as of the date of receipt of the loan. And you have fundamentally two periods. You've got 8 weeks or 24 weeks. So if you got your money on May the 5th, you have 24 weeks from May the 5th that will end your covered period. So all of your calculations and transactions need to be taken into account within that 24-week period. I'm not sure what alternative payroll period means. Other questions? Okay, we've got some more. We fired a single employee during the 8 or 24-week period for performance issues, but our overall payroll did not reduce significantly. Although it did a small amount, will this affect our eligibility? It shouldn't. Again, this is one of those you'll have to get into. There are some supplemental sheets, there are calculators and things like that that your loan provider will give you to help you with that. Question: why is the expiration period on 3508 EZ 11/30/20? That is a CYA by the government, because they put these expirations on there and then reissue the form in the event that they change something. So don't really worry about the expiration date on that 3508. Joe, I don't see any reference to the CARES Act under programs and churches, and is found in the administrator page. Joe, do you want to address that?
Yeah, thanks, James. I just posted that the June 10th session is listed as federal relief programs and churches, and is found on the administrator page of our recorded webinars. I'm going to post that up, the link to that up in just a second.
Thank you. Other questions? I've put up here the 3508S calculation, or the form rather. Looks very similar to the other one. The problem is in the documentation. So the 3508S actually asks for a little bit more documentation than the 3580EZ. Again, go back to your lender for the documentation they need. Do wages paid to an employee who voluntarily quit during the covered period need to be included in the wages calculation? Typically, they would. And Joe, I think, posted the link to, if you're looking at the chat, he's posted the link to the other presentation, seatnetwork.org/administrators.
That's right. You'll find on that administrator page under the title Federal Relief Programs and Churches, James's webinar from June 10th, along with the PowerPoint presentation.
And that includes all your debits and credits and how to account for PPP. Okay. So here's my contact information. I'll leave that up, answer a few more questions. At the top of the application, it asks for employees at time of loan application. Is this number of employees or FTEs? Yes. You have to go through this FTE calculation anytime it asks for a number of employees. Thank you, Mary Lou. Any other questions? call me.
James, I think we've covered all the questions that came through the Q&A feature as well. If anyone had a Q&A question, if there was a question that was posted there that didn't get answered, please enter it into the chat feature now.
And I would say, if you're going to call me on my cell. I'm never in the office. I'm always in one of the churches.
You have one more question down there, James, for clarification.
Number of employees is actually FTE, not the actual number of employees, which would be greater if part-time. This is where they got into trouble in the first place with the very first form that they put out back in May, and then had to pull it back because that first form never took into consideration the fact that there might be part-time employees. There was no place to put anything like that on the form. So in this case, depending upon which form you use, it will have you enter the information with FTEs, or in one case with the 3510 without FTEs, and then enter part-time later. So go back to the form, look at the instructions. I think they're very clear. They're not pages and pages and pages of instructions like a lot of forms are. There are 2 or 3 pages of instructions, and then rely on your financial institution to make sure that you fill that out correctly, because their understanding and what they're looking for, they've been given guidance, but I never underestimate the opportunity for Murphy to get us on something like this.
So I think that covered all the questions, James. And to answer Mike Green's question, the slides for this presentation and the webinar itself, the recording and the forms will be available likely tomorrow on the website in the administrator page that is copied here in the chat. So take a look there sometime tomorrow. And James, thank you very much for this presentation. Join the person who attended who said it was presented in a very straightforward and useful way. And we'll look forward to having you back sometime in the next few months to answer the questions on what the next Congress might do to change things all around.
Well, I'm never without an opportunity to serve, am I?
No, we truly appreciate it, James. Thank you for all your support of SEEP Network and our member institutions and the church overall. So we'll look forward to having you back, and thanks everybody for attending. We'll close up now, and please do be in touch with James if you have any particular questions that he can help with.
Thank you.
Thanks, James. Take care. Happy Thanksgiving all. Bye-bye.
Bye-bye.